Good afternoon from the downtown rising metropolis of Shreveport, Louisiana, at the headquarters of Eagle Financial Management Services for another edition of the Jack and Bill Show. We have a special show for you today. Bill will be back on with us likely next Friday, but we have a special guest from Fort Lauderdale, Diamond Dave Meldo. We are going to talk briefly about the markets, and then our special guest is going to talk to us about a wonderful charitable opportunity, and then we're actually Diamond Dave, as he goes by, is an expert teacher on how to do levered plays in the stock market with common stocks through a thing called call option spread. So can you hear me okay? Dave, how are you?
Sounds great. Doing great. Thank you for having me here today.
Oh, that's awesome. So I thought I might just briefly, before we get into it, love to hear some of your thoughts on this. We won't spend more than a few minutes here, but we're going to have to spend some time on this next Friday because given the news that's happened this week, we came into even this Senate race. I think that the markets were likely, everyone was saying, the commentators were saying that, how the market really liked that we had a divided government. It looked like the Republicans were going to take the Senate, and then that was going to make the markets do even better. So then the Dems take the Senate. So now they've got the House, the Senate, and the presidency. Not what the talking heads had said was good. And look at what happens this week. The market takes off. S&P 500 wound up 1.8% year to date. Closed out the week up almost 2%, 1.8. NASDAQ was up 1% today. We've got Nancy Pelosi concerned about Trump using the nuclear codes and doing something stupid next week. And the Dems want to they are preparing articles of impeachment to start the week next week. Yet the market is going up with all this stuff. What do you make about that, Dave?
Well, if you go back in history and actually study the markets when it comes to the presidency, typically speaking, when a Democrat takes office, the markets do go up. That is normal. What we're not dealing with is a normal presidency. For the first time, we had a president who is a businessman, and that just changed the whole dynamic of how it all works. But typically speaking, this is not unusual for this to happen. I remember the night that Trump got elected, the Dow futures were down 800 points at the point in time when they realized that he was going to be president, regardless of the fact that he was a businessman. So it's crazy. I think we all know it's crazy. These numbers are just insane, but it's not necessarily the strangest thing. Of course, always keep in mind, buy on the rumor and sell on the news.
No,
so
and I agree.
Possibility.
I agree with that. I think that, the talking heads are now saying that the markets are enamored with massive fiscal stimulus that's likely going to be in the works soon to keep the party going. But, one of the things that bothers us, me and Bill here at Eagle Financial, is we've got the S&P 500 and the NASDAQ market selling at over 40 times trailing earnings. You've got bond yields rising dramatically this week. The Fed funds rate is not going anywhere till 2024. The 2-year note closed at 0.146. It's not really budging, but the 10-year closed at 1.11%. That's a dramatic move from the lows in yield that we had a while back. In the 30-year is very close to bumping 2%. And so this is not good. I don't think it's really going to impact the equities markets hugely until the bond market gets to higher yields, maybe 3 or 4% that, competes for capital with the equities markets. But as a discounting mechanism, it's a little bit worrisome, especially compared to the rest of the world. We had West Texas Intermediate close today at 50.88. That's up nicely this week. But Safe Haven's gold and silver were up sharply until they were down dramatically today. And they're now down about 3% on the week. So I wanted to, that's just kind of, we're using the strength of this to rebalance here in the new year. You've got a new year. You could take some gains now, and it's no longer taxed at 2020 rates. We could wind up having higher capital gains rates this year, but at least it's been deferred into the new year. And we recommend, rebalancing here to start the new year. But with that said, I want to get into our special guest. Well, Diamond Dave, tell us, I met you in the Abaco. Stacy and I, my wife, vacationed there in June, and then in, I guess it was June 2019, and then Hurricane Dorian ripped through there a few months later. And then I was down there in March of 2020. I wanted to say this year, it's a new year. And I met you on a rooftop down there, I think.
That's right.
Yeah. So tell us, first of all, how you got the nickname Diamond Dave, if you don't mind.
Well, you don't give yourself a nickname. So it's actually come up multiple times in my life, and just from my personality or my drive, the way I get things done. It actually, I think, initiated originally when I was when I traveled and I did presentations all over the world. I had diamond status at Hilton, so my reps would always make fun of me and say Diamond Dave. So, but it was just a kind of a nickname that spurred. The funny part about Abaco was when we jumped into help mode for Abaco, I started a WhatsApp group, and for some reason, my name on the WhatsApp group was Diamond Dave. I guess I had put that in there at some point, joking around, and so everybody in the Abaco started calling me Diamond Dave. So I went with it.
No, that's awesome. Well, then why don't you've got a great understanding of this because you've spent so much time even during your lifetime down there. But tell us what happened. Tell our viewers what happened to the Abacos with Dorian.
Sure. September 1st, 2019, there was a Category 3 hurricane coming to hit Abaco, which is the furthest east point of the northern Bahamas. And that's something just that happens every year. It's pretty usual. It's called Hurricane Alley for a reason. So everybody, nobody really panicked as usual. Everybody was expecting to have some winds, some rain. And then within about a 24-hour period, this thing went from being about a Category 2, 3 to being what many are calling a Category 7 hurricane, meaning two categories higher than they even measure. It was the largest hurricane that's ever hit the eastern or the Atlantic before, arguably one of the strongest hurricanes in history. And it did the kind of damage that you would only see in a war zone. And I know, Jack, you were there, you've seen it. It's really hard to explain to people the damage that was done when you see large pieces of concrete that were thrown thousands of yards, huge big crater boats that were picked up and thrown into town. I mean, it's unbelievable what the aftermath was like and what these people are going through. And then when we add COVID into the situation, a lot of the NGOs or non-government organizations like ourselves that were there to help had to pull everybody out. So there's very few people left there helping right now. We are one of the organizations that is fortunate enough to have people there, but it's a really desperate situation, and it's sad to say that it's now a year and a half later, just about, and they still need a lot of help.
Yeah, so I think most of our viewers probably don't understand this, but like how many people died there, and do they even know?
Right. The problem was the media was reporting 20, 30, 40 people, but I flew in on day one. I was there. I was on the receiving end from the injured people coming in. Those numbers were tremendously higher. We're not ever going to know. There was a large population on that island of people who were undocumented. So we don't really know how many were there, but we certainly went from about 4,000 people on the island to about, afterwards, maybe a couple hundred. That's not to say that they all perished, but a lot of them left and went to America, went to Nassau, other islands for safety. And now they're back growing again and people are coming back. But sadly enough, a lot of them are coming back to sleeping in tents on the floor, where their house used to be, and they've lost everything.
So here we are now in January 2021. What percentage of the structures that were there are still remaining, and how far has the rebuilding effort gone?
The cleanup is doing well. I know there's a lot of miscommunication out there. There's a lot of people that like to sensationalize the fact that maybe the government isn't doing their job or doing what they should be, and that's not for me to argue. We are there. There are plenty of people that have come in from all over the world. We had people from the Netherlands, from Jamaica, from Great Britain, all Canada, all over the United States. And when we're there, the cleanup is really, we've done well with the cleanup. The rebuild is a whole nother ball game. I met Jack literally on a roof. We would just, every day we'd have a new project, and we'd go to someone's house, and that was, we walk into a lady's living room, and while we're talking with her, it starts raining outside, and the rain is literally falling on us. And, her and her family are just sitting there on the couch, just with a glaze on their eyes. It's normal at this point for them. And we wanted to do more. We want to try to help as many as we can. So we just got on the roofs and did what we did. I'm not a roofer, but thank goodness some of you guys were, so you guys could help us out. But you guys did a wonderful thing over there for us, and your help was certainly appreciated, and we want to continue that.
Oh, thank you. I intend to come back down there as well. And
Awesome.
Okay, well, tell us how. If any of our viewers, I'd just like to say, we're starting out the new year. What a great way to think about charitable giving for 2021. There is an enormous need there that Dave is talking about, and he has headed up some wonderful efforts and opportunities to rebuild and restore this place. And Dave, why don't you tell our viewers how we can participate, even get a tax deduction here to start the new year? How can we help the Bahamian people there with the rebuild?
Oh, I really appreciate you asking that. There's quite a few ways that people can help, but at this point, I think we've moved into the phase where we're needing we need monetary help desperately. And I've always been a big proponent of the fact that we're all just so fortunate to even just be here right now, to be able to talk like we are, and to be able to listen to a broadcast on Facebook. These simple little things that we take for granted in life, and to be able to make money by trading. How wonderful is that? And just if we can give back just a little bit of that to people who just don't have that luxury, don't have that fortune, we'd really appreciate it. Our organization is called Love Abaco. We are loveabaco.org, and we're very unique because we were sort of a grassroots effort. We weren't an organization that came into the hurricane with everything in place. We are a combination of multiple organizations. So we went out and just got all the people that were helping and put them all under one umbrella. And every penny that is donated to Love Abaco goes to the charitable organization for the First Baptist of Orlando. It's called the First Orlando Foundation, and they distribute every penny of that to the Abacos, directly to the people, to supplies, to helping people get fed, to anything that we can do as far as donations go. Right now, my garage is full of donations, and every time I find someone that has an airplane or a boat, I'm loading up my truck and I'm off to the boat to put stuff on there. But we do need help. We do need, people's assistance. And yes, we got kind of put on the back burner. A lot of things have happened over this last year, but please do understand that there's still a strong need there. And what we went through here, they did too. But they, on top of that, had such a horrific hurricane hit them 6 months prior. So it was a double down for them that was just terrible. So we have a GoFundMe, www.gofundme.com/Love Abaco. That's one way to donate. You can always email me at dave@optiondave.com. Dave@optiondave.com, Dave@optiondave.com. If you want to donate directly to the organization, I can give you those links. But we are a 501c3. It is charitable. Deductions can be taken from you're donating towards Love Abaco, First Orlando Foundation. We also have a Facebook group for Love Abaco. We'd love for you to join that and follow us as well.
Okay, yeah, and just for the benefit of if someone was scrambling to find a pen or something, just tell us those things one more time.
Sure. It's GoFundMe.com/Love Abaco is our GoFundMe, and you'll see this logo on there, so you'll know you're in the right place. You can always go to loveabaco.org, and my email is dave@optiondave.com. If you have any questions or want to make any other types of arrangements or donations, you can certainly email me, and I'll be glad to help you out with that.
Okay, that's awesome. Yeah, so we've mentioned this before. I've got water in my Bahamas coffee cup that I got down there, and I just love that place and can't wait to get down there and even to vacation. I guess on the one part of the island, some of that was Cherokee was never harmed, but the main thrust there at the airport and everything, it's just needs a lot of help to probably 85% of the Bahamian revenues come from tourism, something like that. Yeah, and all that stuff. I mean, that really hasn't cranked up at all yet, right?
And you speak of the southern end of the island, and while they didn't get hit terribly, they got a Category 3 hurricane, and they lost power. Some of them still don't even have power today. I mean, imagine that. I mean, a good percentage of the island still doesn't have power.
Yeah, it was when I was there, it seemed like my recollection was like 80% of the structures had been wiped out. And, the houses that we were in, you talked about that, explain that well. I mean, people are sitting in their houses looking up to the sky and had amazing attitudes, regarding this that really touched me. Just a beautiful people and a beautiful place. And so if anybody, and I'll just say this too, if you didn't get that, anybody can reach out to us at Eagle Financial on Facebook, and we can steer you. There it is. Wesley has put it up on the screen there. GoFundMe.com/Love Abaco. And okay, well, I think unless you have something more with that, we're going to get into the meat. One of the things that we wanted to talk about with Diamond Dave regarding options. Are you ready for that?
Always ready for an option talk.
Okay, well, I want to kind of just leave this up to you, and I'm not sure that we've got the best. We entertained our graphic abilities, which are kind of lacking. So this is a really sophisticated way to have levered opportunities in the stock market with in both individual stocks and stock market indices. And so I'm just going to turn this over to you, and I might interject some questions along the way. But now, and this is the opportunity, the one I wanted to tell our viewers, that Dave has taught classes on these. He's very successful option trader, and we want to give him the opportunity to share, how our viewers could reach out to him at some point later. And he teaches classes, I think several day classes, for a fee. And after you've, I don't care what order you do this in, but make sure you let everyone know how they can reach out to you. I'll just say that again. He gave us his email already, Dave@optiondave.com. That's option, OPTION, Dave.com. Dave@optiondave.com. If you like what you hear, you want more information, or are very interested in a real sophisticated look at how to make money with mostly call option spreads. And with that, I'm going to turn it over to you, Dave.
Absolutely. Thank you very much. And certainly please do interject if you have any questions. And, this this class that I've been teaching now for almost 12 years now and that's strictly online, I think it's a 28-hour course. So I'm going to try to consolidate that down to 10 minutes. So it's a little difficult, but we'll get through it. Obviously, the premise of what I've been doing and what I teach and what I trade is options. Options are a leveraged way to get into a stock with not just less money, but the secret sauce to being a great option trader is to take less risk with more profit potential, but also to increase your probability of success at the same time. So when you can get that nice mix of high probability and high reward potential, we've got something working. So really, to just come back to the very beginning, and Jack, I might just use you in this example, just for people that are new to options in general. The best way is just to say, let's say Jack owns a $100 share of stock, and I want to buy that stock from Jack for $100. But the problem is, I don't have $100 on me to give to Jack right now. And he says, you know what, Dave? That's okay. Here's what I'm going to do for you. I'll give you the right to buy the stock from me for that $100 anytime you want over the next week, should you come up with the $100. I said, wow, Jack, thank you so much. So I go walking away and he says, time out. Wait a second, Dave. I'm not going to do that for free. You're going to have to pay me something to do this. I said, okay, what do you want? And let's say Jack says $5. Okay, that sounds pretty good to me. So I give Jack $5. I now have the right to buy Jack's stock at $100 anytime I want over the next week. I control Jack's stock. He still owns it, but I have the right to buy it from him should I choose to do so. So I'm going to use really dramatic scenarios here just for numbers' sake. Let's say all of a sudden something huge happens and the stock goes up to $150. Is that good news for me, Jack?
Oh, absolutely.
Real good news for me, right? Yeah. Why? Well, I can buy that stock for $100, can't I? And then I can turn around in the open market and sell it for $150, in which case I made $45. I had to give Jack that $5, and he gets to keep that no matter what happens here. So in that scenario, I made $45. Now, we actually aren't going to do that. As great as that sounds, what we do and what I teach is instead of actually going out and purchasing the stock from Jack and then turning around and going to the open market and selling it, I can just sell the option itself back to the options market, and I'm done. And as a matter of fact, I'll make more than $45 if I do that, because there's something called time value. There's still a week left of time on that option, and that's worth more money. So all we do is buy the option and then sell the option. I have no interest in ever owning the stock, never getting into the stock. The stock is merely just the vehicle that's driving the price of the option for us. So in that scenario, the stock goes up. I just made great money. If I bought the stock at 100 and sold it for 150, I would have made 50%. In my example I just gave you, I made 900%. So there's the leverage. Dramatic, I know, but there's the leverage. The downside, what if that stock that Jack owned went to 50? Jack, is that good or bad news for me, you think?
Yeah, not good.
It's not bad though, is it? For me,
no.
Right? Because I don't have to buy the stock from Jack. I have the right to,
right?
But I don't have to buy it at 100. I can walk away. And in which case, how much did I lose? $5. That's it. That's all I could ever lose is $5, because that's what I put into the trade. So it's lower risk with a higher rate of return potential. It's control versus ownership. And if you talk to some of the wealthiest people in the world, they'll tell you that control is the key to success. Not, you don't need to own things, you need to have control over things. And the ability to buy them is the best way to go. So just, that was kind of a quick example of how an option works, and that I'm leveraging myself. Now, I don't usually buy calls. That's a call option, by the way. A call option is when you think the stock is going to go up. You can also buy what's called a put option if you think the stock is going to go down. And it works the same way. As the stock goes down, you make money, and you have limited risk if it goes up. But we don't typically do that. So we don't buy stock. I don't short stock. We don't typically buy a call or buy a put. What we do is we do spread trading. And spread trading is the combination of multiple option trades at the same time on the same stock. So that's what a spread trade is. It's combining together multiple options.
So you actually do buy a call, but you also sell a call in the same transaction.
Exactly. And it's one transaction. That's correct. I'm glad you pointed that out too.
Yeah.
And it is one transaction. I am actually buying and selling a call at the same time in one transaction. So that's why when I say I don't buy calls, because I'm actually buying a call spread is what it's called.
Yeah, and I'd like to just interrupt you for a second.
Sure.
And say, when you gave the $100 to $150 example, I don't know if you did any call spreads with. I actually did here with a few of our clients with these vaccine companies, like the BioNTech and Moderna, were amazing companies that just got crazy with volatility, and I had some spreads going with those. In fact, I don't know if Dave remembers this, but I messaged Diamond Dave and asked him to give me some examples of how to play the BioNTech, and I actually did it with both Moderna and BioNTech, and those were very fruitful trades. Yeah.
Absolutely.
So keep going.
Yeah, especially in that scenario where the more likely a stock is to move, the more expensive the option is going to be. It's called volatility, implied volatility. So in those cases, it might have been very difficult to get a good call option because they would have been just so darn expensive. So the way that we can get into the same trade we just talked about with XYZ stock that Jack owns, what I can do is I bought the right to buy the stock at $100 from Jack. What I can then do is I can go out and sell someone else the right to buy it from me at 105. And I can collect $3, let's say, on that. So I bought it for $5 from Jack, the right to buy it. I gave someone else the right to buy it from me at 105, and I collected $3. So my net investment here is now not $5, but $2. So I just took 60% of your risk off the table. You can now only lose $2. And it may not sound exciting with XYZ stock, but when you start saying Apple or Amazon or Microsoft, now you start to think, wow, so I can just only have $2 of risk. But wait a second, someone else has the right to take it from me at 105. So that is a downside. Sure, we are capping our profit potential. If I just bought a call by itself, I have unlimited profit potential. That stock goes to the moon, I keep making money. But I'm going to sell an option against it, and I'm going to create a spread. And here's the question that I ask all investors. Would you be willing to give up profit potential if in return I can limit your risk, I can limit how much you're putting into the trade, so your capital requirement, and I can increase your probability of success? Is it worth it? Because you know what we're talking about. We're talking about greed. And most people are greedy, aren't they, Jack? They are, right? We all want to make as much as we can. But if you can get rid of that greed bug and say, you know what, though? I'd rather be right more often, and when I'm wrong, lose a lot less. And that scenario makes a lot more sense. Now, the beauty of the trade I just gave you, where it's called what I would be doing is buying we don't know the expiration. I guess it was a weekly option. There are weekly options. And I usually do these with weekly options every week. I like to do them around earnings, FDA approvals, things that cause the stock to move. And what I did with Jack is I bought a weekly 100-105 call spread. I paid $2 for it. My risk, $2. My profit potential, well, let's think about it. I have the right to buy it at 100. Someone else can take it from me at 105. So 100 to 105, I can make $5, right? Because I can buy it at 100, but I have to give it up at 105. So I can turn that $2 into 5. So my profit potential is $3 on a $2 investment. That's 150% rate of return, if I did my math correctly.
Yes.
Not a math guy.
No, that's good.
So 150% rate of return on a stock that went up 5% this week. A 5%. And that doesn't have to be over a week. It could be a month, 6 months, a year. You can buy options for whatever time frame you want. But for me, I think I'm pretty happy with 150% rate of return. And I'm happy with only having $2 of risk, which it's still 100% risk. But now, you take a stock that's $100 and now you can buy it in increments of $2 or, obviously $200 per contract. You need to buy 100 shares. Now it's a lot more, I feel like I have a lot more leverage and a lot more ability to decide really how much I want to put into the trade and be able to manage the trade a little better.
So I'm just curious, if you use the same example of the $100 stock, Dave, okay, so you bought the call on it. Then do you use any kind of a formula to determine how far up the strike price you're going to go to sell the call on the other side of the trade?
Absolutely. I'm glad you asked that. We do something called priced in, and I love this around earnings season because, for example, I think right now I'm starting to look at Bank of America, Citigroup, JP Morgan. They're all coming out next Friday. So probably Monday, Tuesday, we'll start looking at getting into some financials, and that's really the beginning of earnings season. So that's exciting, is when those financials come out. So for the next month or so, what I'll do is I'm going to look at the weekly, the options that are going to be expiring the end of next week, which is, Friday morning is earnings. So that afternoon, my trade's done. And what I do in order to determine how far out to put my strike prices is I take an at the money straddle. What that means, they love using big words in the stock market, and I always love that. But we buy a call, it's we go long the stock. You bought the stock, right? But so a straddle is just buying a call and a put at the same time at the price of the stock. It's called at the money. So if I price out on that example we just did, if I had a call for $2 and a put for $2, that's $4. That means there's priced into that stock or those options. That stock is going to move, according to the experts, according to people that know way more stuff than we do. They're saying that stock is likely to either go up or go down $4 next week, by the end of next week. They're telling us that. So I don't have to look at the PE ratio. I don't need to study the CEO and this and that. All I look at is how much is the market telling me the stock is going to move next week. And then I look at the charts and I see, well, what does that stock typically do on earnings? And I can take a list of 1,000 stocks that have options, and I can narrow it down to 10 or 20 of them that I feel are going to move more than what's priced in. But one of the beauties of doing call spreads is you only have to go halfway out. If I put my sell strike about $2 out, if there's $4 priced in, if I put my sell strike about $2 out, my buy strike $1 out. So I'm going to go out $1 on my buy, out $2 on my sell, and have a $1 gap. I can typically get right around a 200% return on my trade. 200%. Wow. And all it has to do is do half of what the market thinks. But you have to get the right direction. And that's the secret sauce. He's getting the right direction. But hey, I could just pick 10 random stocks. And if I can be right on 4 of them, I'm making money.
Right. That's exactly right.
That's right. Yeah.
Yeah. I mean, I've heard, generally speaking, historically, if you make money on 6 or 7 out of 10 trades, you're going to do terrific.
Absolutely.
Yeah.
So in this case, I'm making it to where you can actually make money without being right on even half your trades, because your reward potential is going to be so much greater than your risk.
Yeah.
And this stuff gets really fun when we start diving into the idea of not just doing it with a call spread, but also buying the put spread at the same time on an earnings. Now I don't care which way the stock goes. I just want it to move. And if it moves, I make money.
So no, I didn't know that. So you do put spreads as well then?
Correct.
right? And that's just the complete inverse of everything you just shared with the call spread example. So
But it works exactly the same,
yeah,
right?
that's right. And what you're looking for with a straddle like that is all you need is some kind of big news. And yeah, with straddles, as long as you have news that's big enough that gives you the volatility, what you make on one side of the trade will way more than compensate you for what you lost on the other side of the trade. Yeah,
Right. The only
yeah,
issue with straddles and strangles would be the other example that a lot of people use. The only problem I have with straddles and strangles is they're priced to break even. So the people that know more than we do, the market makers, the people setting the pricing on these, the algorithms are pricing out a straddle or strangle to really break even. So if the stock does what it should do, you should not make money, not lose money. In order to really knock it out of the park, like Jack's talking about, which you absolutely could have with Moderna and other ones, is it's got to really take off. So instead of looking, again, it comes back to my philosophy of trading, and I'm different. Not everybody trades the way I do, but my philosophy is I'm not trying to hit a grand slam. If I can just hit a single or a double, I can win a ball game. And
yeah.
I don't, a lot of times you swing for the fences, and the problem is you fly out a lot and you strike out a lot. I would rather just hit singles and doubles and get some runs in. So for me, instead of doing, say, a straddle, what I'll do is I'll sell an option further out on the put side. I'll sell an option further out on the call side and create two spreads. So now all I need is that stock to go to one of those two sell strikes that I have, and I make 100% rate of return. That's my goal, is to make 100% on that trade. So that's where I pick my strikes based on my rate of return.
Yeah, I'll throw something out to you. I've got a client that used to own a commodities trading firm, and we've done. It seems like with when everything was so pessimistic with the pandemic, once like the market was discounting with a lot of cyclical stocks that this thing was going to last forever, it seems. So they just got creamed. Or you could think of, airlines, autos, casinos, things like that. Like Caesars, for example. It went from 70 something all the way down to, off the top of my head, something like 5, and then it's back up into the 70s. So, and there were many stocks that did that. So we would go long the stock and buy some calls on it, and then once it got going, then we turn it into a spread by selling the call. And then we're like, well, then it might go up a little bit more the next one. We don't even need to own the stock anymore. So we just get out of the stock. And now what started as a call option and being long the underlying stock, and you no longer need the stock because you have the call options. And those were some strategies that worked well this year. Amazingly, if you're in the right industries, really just recently, we've seen cyclical stocks just going, crazy. So,
Unreal.
so anyway, well, keep going. What else did you want to tell us, Dave?
Yeah, sure. There's so many great aspects to trading spreads that you touched on a couple things there about just the downside too. This isn't all about. I don't just teach call spreads because the market doesn't just keep going up like this. We all know that, and I'm sorry, but the higher you climb up a building, the longer the trip back down is going to be, and it's a lot quicker on the way down than it is on the way up. So another thing that I like to stress to people who do own stock, I'm not here to talk people out of stock. I'm just saying there might be better ways to leverage yourself. But one of the ways that you can protect yourself is by just buying a put. You can take a stock and buy the right to sell that stock at a certain price underneath where it's trading, guaranteed, no matter what happens. So if you have $100 stock and the stock goes to 5, you had the right to sell it at 90. You saved yourself a tremendous amount of money just on buying a small little option, a very inexpensive thing out there. And my favorite thing to ask in my classes is, how many of you have ever bought a protective put? And that's what that's called, a married put or a protective put. And I ask people, and maybe 1 or 2 people say, yeah, I have. And then I say, well, how many of you bought car insurance before? Homeowners insurance, because it's exactly the same thing. A
Well, oh,
protective
let
put,
me enter.
insurance is a put. That's what it is.
Don't you think, isn't now a wonderful time to own some protective puts, in your opinion?
I couldn't think of another better time in the
Yeah,
history of the stock market.
yeah,
And you know what? It's
exactly.
not even that it's necessarily going to pay off. You don't want it to pay off. You don't want your house to burn down. But don't you sleep better at night knowing that if your house did burn down, that you are not going to lose everything you own? I mean, the peace of mind alone from buying a $5 piece of insurance on a $700 stock that you own, to me, I don't think there's a price you can pay for that peace of mind, and that's what we're talking about. It's just, so many people are so highly leveraged in the market, and they have no protection. And the second big thing that I think people make it, which is a huge mistake, is they have no exit strategy. They
Right.
don't know what they're going to do. They got into something without any sort of plan. And my students, when they go through my classes, the number one thing that they come out of it with is they know that before they place a trade, they have to write down every single detail of that trade, what they're doing, why they're doing it, what the numbers are, and most important, exit, when to get out. And it has to be specific, because once you have an exit strategy set in place, now you no longer have to worry about it. It's, it either is or it isn't. And there's no more of this, should I sell it? Should I buy more? What should I do? And now you're up all night. You're not sleeping well. You're worried. You're waking up to watch the Japanese markets close. And Jack, you've been there. So, just having an exit strategy alone, I mean, little things like that can really go a long way. And I give templates out that people can follow on their trades that ask all the pertinent questions you need to be answering. And, people write me all the time and say, Dave, I'm in this one trade and it's already up $5. Should I sell it? And my answer every time is the same. What does your exit strategy tell you to do? Well,
Yeah,
I
that's
didn't
good.
put one together. Next time, maybe you need to think about that.
Yeah, because that's a way to take the emotion and the fear out of it. And yeah, it's been, I've noticed that this year, option premiums, this has been a wonderful year. If you own the underlying stock, you could get so much selling calls on stock that you own this year. It's not like it was, back in April, May, and June. I mean, the premiums aren't like they were. But, you talk about protective puts, but think about in a pandemic, you have a lot of companies that have gone out of business and will go out of business. So you can speculate, with puts as well. And I'm sure, you do this with your put spreads. And so, yeah, we've got, I just want to tell our viewers again that Dave, obviously, he's done all this with no notes in front of him. He can look at these option chains backwards and forwards, says he's not good at math. That's probably a lie. And you have to be good at math, to get these options like that. And he's Dave at optiondaveagain.com. Wesley's had it up there for us. And I'm just curious. I think that's been there it is. He put it back up there again. This has been a fantastic introduction into, whether I've stimulated some interest. I'm probably going to get in trouble with Bill because we don't do a whole lot of speculation, and we do have a game plan, a written letter of investment policy with all of our clients, and maybe 5% of our clients do option trades at all. But if you can understand options, you can understand the stock market, as well. I mean, I
There
remember
you go.
when I got my MBA, I took, a 400 level investment course, and the teacher was just a wonderful retired colonel. He started the class with options and made us buy one and actually track it. And we had to present it at the end of the class. And I thought, man, this is challenging. But if you could understand that, it was so much easier to understand stocks and bonds. And Well,
Jack, you nailed it right there. Education, just whether you apply it or not, knowing what's going on in the markets is tremendous. That is such a great resource to have. Just the knowledge of it's one thing people can't take from us, right? Is our knowledge. They can take
that's
anything else. You
exactly
can't take
right.
my knowledge.
And so I think I can't tell by looking at my phone, but usually about this stage, I recently a bunch of people made me upgrade to an 11 here. So, but because my other phone was dying, I can't tell by looking at it without messing this thing up. So we're gonna wrap this up. And again, if you want to help with the abacos, that's what we really, there it is right there. GoFundMe.com/loveabaco, or you can track Dave down on Facebook and follow this stuff. This would be a wonderful time. He's raised almost single-handedly north of $140,000 for this. He's put a lot of his own money into it, and just the grit and the grind of everything possible to help out every way imaginable. I mean, Dave has just been wonderful for the people of the Bahamas and specifically the Abaco. So we wanted to start off the year with a charitable opportunity for you. And then the options, if you'd like to learn more about options, Dave at optiondave.com, or reach out to us. And then I always like to wrap it up with some sports. So we've got sports and finance. What better world is there than that? So I'm going to throw Diamond Dave a curveball though. And because we've got the NFL playoffs starting this weekend, and my wife is a huge Saints fan. We try to go to a game a year. They're playing the Bears in the Dome this weekend. Unfortunately, they tried to have 50,000 spectators, and they're not going to have hardly any. That's just the way it is with the pandemic. So we've got a healthy Drew Brees, and we've got Kamara is going to suit up and play. So I think the Saints are they're looking pretty healthy, at least in the first round. They're probably going to wind up having to go through Green Bay. But I wanted you to give Diamond Dave a chance to redeem himself on a sports trivia question here. So I'm just kidding, of course. So who is the GOAT? Is it Bill Belichick or Tom Brady? The greatest of all time. We've got Tampa Bay playing at Washington, the Washington football team, and Tom Brady has led them to the playoffs again. Now, he was the worst ever quarterback to go through the NFL Combine. He ran the 40, I think, in like 5.27.
I think he walked it. Yeah.
Yeah.
He needed to put his shirt back on.
But anyway, so what's going to happen with Tom Brady and Tampa Bay in the playoffs? There you go. My last question for you.
The two things you never talk about: sports and politics. Here we go. All right. So you asked me a bad question because I'm a diehard Dolphin fan. So it's tough for me, and I am biased. So my prediction of the week is the Bucks are going to lose in the first round. They're actually going to lose the game.
Okay.
That's my prediction. My second prediction is the Saints are going to roll, because every single Chicago Bear friend of mine, every one of them is asking me for tickets to go see the Magic Bowl game already. So they're already watching basketball season.
No, that's good. And I'm indifferent. I actually lived 22 years of my life in Virginia, so I grew up. My wife told me you can't call them the Redskins. I grew up a Redskins fan. Now they're I don't know what they're going to call them. They don't want to call them the politicians. That's for sure.
Yeah, that's not a good idea.
But I'm going to be watching with bated breath and rooting for the Washington football team as well. And of course, I want to see the Saints go all the way with Drew Brees this year. So this is his year to do it.
I was fortunate enough to be at that Super Bowl when he did it, so I got a chance.
Oh, that's awesome!
Yeah, I got 2 tickets from the NFL. They were disability seats, and I took a young man that was injured in the war, And I
Oh,
went and picked him up and took him to Miami, and we went and watched. We sat right on the sidelines and right behind Peyton Manning, and we were on the wrong sideline, but that's okay. We got to see an amazing event. That was a lot of fun, and I will answer your question. Who is the GOAT? Dan Marino, sir.
Okay, Dan Marino. That's awesome. That's awesome. A Pennsylvania boy, went to Pitt. Yes.
Yeah.
Yeah, that's I think he was in the 84 draft. Is that right?
That's correct. The big draft, right?
Yeah, the big quarterback draft.
I think it was
That's
Elway,
exactly.
Kelly.
And he was very
highest
late
on
to
the
be picked and turned out to have a phenomenal career. Yeah.
Yes,
So
he did.
okay, well, man, thank you so much for joining us today, Dave. And I
Thank
hope our
you.
viewers got a kick out of that and at least jogged your brain with some challenging things. But we're here. You can reach out to Diamond Dave, or myself if you have any questions and comments. And thank you once again. Thank you so much, Diamond Dave. And
Hey, thank you for
hope
having me.
to,
I'd love to come back sometime. Anytime
yeah.
you want to chat. I love talking finances, and I love talking about the abacos. This is what it's all about right here for me right now. I'm not even doing anything in the financial world at the moment. I'm just really focused on Abaco, and I appreciate your support and everything you've done for us. I really do.
Yes, sir. Okay. Well, thank you so much and have a great weekend, man.
Hey, you
Take
too.
care.
Take care.
Bye bye.
Bye.